Welcome to Trading Lounge and the S&P 500 for the 10th of April. On the weekly chart here for the S&P, we've got this flat pattern here with wave 3 here, an A wave, and 3 waves here to make the B wave, and then 5 waves down to make the C wave here of wave 4. If this is correct, then we'll just continue to move up through here and make new highs. If I'm wrong here, then we're going to be wrong in this box here, where we'll only have 3 waves to the upside here, and then we'll collapse down through here. Let's go in and have a closer look. So far these are our 3 waves to the upside. So we got the turn here, and we were looking from this low here, we were looking for an A wave, a B wave, and a C wave through here. And I just have to point out too that we just have to stay with the evidence, and it's important, you know, at these turns here that we don't get emotional, because, you know, when this rally came into here, you know, most people were thinking that it was a 4th wave and then they would be going down from this point here. Now, they could have been correct, and that's fine too, but what we did is we stayed with the evidence all the time. So, you know, we looked for our trade setups, we waited for this to play out in 3 waves, then we looked for our setup here, and then we went long through up to here, and now we're up to this point here. Yes, the market could just continue to the upside here. It could do all sorts of things, but what we've been doing is just staying with the evidence, and we've got 5 waves up through to here. We were trading up to 2,800. Let's just go in and take a closer little look at this here. Because sometimes you just got to be a little bit patient until you see, you know, until you see what's what with these things. So we were lucky because we used the trading levels, and we know that they just create beautiful support and resistance and trade setups and so on. So in this case here, we're just using the Elliott Wave here in terms of 1 and 2 here and 3 here and 4 here and going up for 5 here. So we're pretty close to where we want to be at the moment, and we wanted to get to the 28 here and take profit. So that was our game plan. And now we just have to sit and wait. Now, it could be quite, could take quite a while, or it might be quite quick. But you know, over here, this took a while for it to play out here, and yeah, we need to get a grip here as well. So the length of wave 1 or wave A here, in terms of equality for a wave A and wave C here, that will take us up into this higher end of this box here, closer to the 61.8%. Now, when markets are heading up into those sorts of, you know, that close to a large number here, well, they'll tend to try and use the large number as a psychological sort of target finish line, so to speak. At this stage, don't remember though that even if it does move higher through here, then you know, for this to be wave 2 here and to wave 3 here, even to this box here, that will just give us equality to wave 1 here, and we'd expect wave 3 to be longer than wave 1 here. So we would need to reassess this, but let's just go in and have a look at this here on the hourly chart here. So with this structure here of 1 and 2 here and 3 here and 4 here and 5 here, I don't need these anymore. The only problem with this situation here is that when I count wave 1 here, 2 here, 3 here, 4 here and 5 here, this wave 3 here is actually the shortest in here. So I've been sort of considering that. So that's one problem that we've got. It needs to be resolved. The other problem is this particular structure here. I've had this as wave 1 here and back for wave 2 here. I can make it fit, and I'm kind of okay with that, and then that will leave a nice wave 3 ABC for 4 here and up for 5 here and finished here. So in a nutshell, we should be out at this point, and we can If you're not out at this point, well then just bring your stop up to this previous low area through here, and we'll look at that in a moment. So yeah, the only weak spot in this whole thing here, just reviewing it, is that this wave 3 is the shortest here, and that bothers me a little bit, you know. So let's just go into the 15-minute chart and have a little look at this. I mean, the other main point here is that if we were going to go long here, then we need to wait for a setup. So don't need that. So the setup would be the classic trading levels pattern, which we can just have a look at again, which will be this one here. So if this is the 2,800, then for us to go long on this, we trade to here, we get out, and then we wait for all this type of these swings across this level here, and these swings will stay within subgroup 2 below, which is if I just go to the tick chart for a moment. So with this is the 2800 area here. So group 1, subgroup 1 above is 10, 20 and 30, and below is 65, 72 and 80. So when we're working with this number here, it's this group 1 here and group 2 here, that's the natural swing range. So we always just, you know, we don't make very many decisions within that space. We only make trade decisions really when if the 2830 became the support, or this group here became the retested resistance, and then would be on the short side from that point. But these swings that occur in here, then we just allow them to play out in this. From the top here coming down here, we can see quite a nice 5-wave structure here, and it's got 1, 2, 3, 4, 5 for 1 and 2 here, then 1 and 2 here, 5 waves for the third wave, fourth wave, fifth wave, a bit of a triangle pattern here with an A, B, C, D, E for the fourth, and then a nice 5 waves down here. So we do have an impulse wave here. The market has moved back up to the 61.8%. I could look at this as also being bullish here as well. So I just need to be mindful of that. I'm just doing this while we're here. So this point to here, that would leave us with all that. There's the 61.8%. So we could say to ourselves, if that 61.8% became the retested resistance, then we'll be going down from that point. So going short under this low is good. Also too, I mean, if I was trading short here, I would look for this low here because it's below group 2, and then I could move the short up to this particular point here. So if I was looking to go short now within group with using group 2 here, I would do it on the 2772 here. So if that became the retested resistance, then I would be going short from that point there. If this market continues to move up through here, because I haven't pulled this apart, but it looks like 3 waves here, so it can move higher. But if I had to go long here again, I would have to have support above the 61.8%. I'd have to have support on this number here, so I'd be looking for some sort of pattern like this here, and then I would be using these guys here to go long on through here, and then I'll look to build in on 10, 20 and 30. Now getting support on 30, that tells me that I'm going to get to 50 at that point, which is the next level up, and take it from that point. So if this market is going to continue past its 5 waves to the upside, and have 1, 2, 3, 4 and 5 here, if we've got all of this right here, and you know, even like I mentioned, it's this is just the arrival here, so this is the reaction. So in this case here, we'd look for the arrival, the reaction, the first high above the level, and then that could be the top here because I may have made a mistake somewhere in here or somewhere. This is why I need to move with the evidence and the setups here, and then it would be like that. So really this point here, we're just here at the moment. So if I wanted to go along again, I'd have to be over here for that. Okay, otherwise I need to be looking for short trades, which we just talked about. So this reaction here, I'm just looking at that, putting here. So really we can actually go copy that. We can go short here as well on that low here. So I'll just leave it like that there for the time being. So I guess what I'm also saying too is, look, we've arrived here, we've taken profit here, and now we're going to chill out on this, and we're just going to wait for another setup here. Because yeah, the problem that I see here is this structure here. So when I look at the cash market probably could also be counted having from wave 2 low here all the way up here, having this here as a wave 3 here. I'm not going to pull it out on the cash market, but that's how it can play out here. And if that's the case, then the market will just come back into this space here, a bit lower here, and then move off. So yeah, because we still haven't sorted out if we've got wave C here or we've got wave 3 playing out. But wave 3 wouldn't end here because it's too small compared to wave 1 over here. Because the quality for wave A and wave C comes in around the 2900 area through here. And if it's going to get to 29, well, then it's going to get to 3 here. But all I'm pointing out today is that we can count 5 waves up to here. Is that correct? I don't know, because this wave here is too short. When I look at the cash market, there is a possibility that all of this can just be the 3rd wave here, and then we have a 4th and a 5th. But at the same time, I do think that we should look at playing the turn here as well. In this, you can get a bit closer to it. You can go up into the 772 as I mentioned before, and we just got to be careful we don't get caught out here as an A wave, a B wave, and a C wave here, and then come back up from this point. So you might want to put smaller positions on here. You could also probably get in there a little bit earlier as well. If I look at this here, the other place to go short, well, is here, and possibly even here as well, but I'll leave that up to you. That's just, I need to think about that a little bit more from that point. But maybe use the trend line to go short on. So the trend lines are the same as the trading levels here. So this pattern here is what you want to see to the downside here as well. So if this was to move down here, whoops, we're on the tick chart, so I need to draw on the other side of the price. I'll come over here. But basically the market will come down, do the same thing. This is upside down, of course, here. So it'll have the arrival, the reaction in 3 waves. It'll move through, come back and retest it in 3. When it does the retest here as well, there'll be the divergence between price and volume. It'll be on lower volume here, and then we'll move down from that point there. So it kind of migrates in the same way, and it's kind of good to know that. And it doesn't mean that you need to short here. You know, you could do it here if you wanted to, but there's a higher risk at that point, so you would have less there. Or if you could note that the volume was moving up through here, and you also had 3 waves moving up here on less volume than this previous trend here, then you also know that you've got divergence in there. You don't need to look at divergence in indicators. You see it in the volume, and then move down from that point there. Is there anything else that I need to look at here? I don't have any robo setups here on the daily chart, so I won't look at that, but I will start looking at robo trades because for the longer term traders, because you know, we can use this as a robo trade here where we just keep bringing up under the low all the time, the stop. There's 3 different robo type trades. I won't go into them at the moment. Just looking for other things here. No. Okay. I'll quickly have a look at the tech stocks will be the same as well. So we've got the A wave here for the NASI and the B wave here, 1 and 2 here, and then same problem here. Wave 3 is a bit short here. It bothers me a lot actually. But anyway, we just see what we've got here, and the same with the NASI here. So we've got 10, 20, and 30 here, 300. That 300 there, that's group 1 there. So that means that this is the swing range coming down into here for this number 8 here. But if we get a nice tested support on top of this here, of the 300, then we can go this little pattern over here, the same thing again. We've got the arrival, we've got the reaction, and we've got 3 waves down here too, as you note, like little A, B, C here. So we certainly can push higher from this point here. We'd count it up, same thing, the 5 wave structure here. So we can be at the top, and we can also go short here as well for this. Let's just put this in. This is like Robo 1 trading, where Robo 1, you're never out of the market. You're either long or you're short. So we'll put the stop there, but we can also put to go short at that point there as well. And like I said, we'll go long if you get this pattern on top here. So first high above the level, and then a corrective move here, and then up here, because we've already got the arrival, the reaction here. So we can go long over this point over here for this. We'll go short here. And the other one, of course, is the DJ. And that's the same as well. We're counting the 1 and the 2 and the 3 here and the 4 here, and then 1 and 2 and 3 and 4 and 5. So we've got 5 waves, you know, so we can, I'll leave it to you to bring the stop up here, and also I'll just shorten those up a little bit. I'm not saying I know what's going on, but all I'm saying is that I can count 5 waves here. There is a problem in this. We can count 5 waves here, and if this low is taken out, that means it will be coming back down from this particular point. But also this could be turned into more bullish point here as well. So this could just be, the whole thing can just be expanding to the upside, where this can just be wave 1 here, wave 2 here, and then we move up here for wave 3, 4, and 5 up here. So that's all probable as well. So we need to be mindful of these things, and that's where the stop would go to keep you safe at that point. And yeah, that's that. Alrighty, I've waffled on long enough, so have a great Easter, and see you when the markets open again. Got to check all of that. Alrighty, cheers.